In this video, I'm going to share with you two more really hard lessons that I had to learn. One was in Amazon, the other one was in Apple. What's up, everybody? My name is Michael Lamott. I'm the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we're doing that here is by showing you my personal journey in 2017, going through each and every trade that I had that ultimately led me to a path that tripled the S&P 500, gained about a little over 60% for the year. And it was not easy, and there were mistakes made along the way. And in these two particular trades, I think that there are some very good lessons to be learned. So let's dive right in. We're going to start with Amazon because I actually bought Amazon first. Ended up buying it in the middle of July. Now, first, I wanted to show you this weekly chart of Amazon so that way you get a bigger picture of the overall move. Amazon had been running for quite a while. We had this bottom back here in 2016, ran up, consolidated towards the end of 2016, ran up a bit more, and then in July, or really June through July, it began consolidating and making this flat base. And so it makes this flat base, breaks out, and then it rolls over pretty quickly, and it continues to consolidate before it ultimately runs up higher. Now, to look at the daily chart to see what actions we actually took, the actions here are pretty good, in my opinion. Leave a comment below. I want to know what you think about this move here, because I think that it was actually pretty slick what Adam ended up doing and where he placed his stops in this particular trade. So you have the flat base here, right, between this and down here, right? And so we end up buying on July 17th at $1,008.65, right on this over here. So a little bit of an advanced entry point, not much, but gives us a little bit of an edge entering right there on the break of this descending trend line. You could also make like a little tiny, let me draw this over here, this little area of resistance over the past couple of days. So you're getting kind of like a twofer on that, and that started to work. That looked pretty good. You had this uptrend. It was getting support around the 50-day moving average. But well, what I really like about this is the stop placement. Now, if we place the stop down here, wrote my notes on this. So down there at 951, it would have been risking 5.7% on the trade, right? Not bad. That's pretty good. That's pretty solid. Moving the stop up here to 979.57 as the initial stop placement, now you're only risking 2.8%. And in the last video, I critiqued Adam for being a little too greedy on a particular trade. But on this case here, I actually like this quite a bit. And here's why. You have it. Like, if this works, right, and it starts to break out, and it did, and it rolls over, you have multiple layers of support right at around that level, right? So if it started to fail immediately, you have this short-term layer of support, then that prior level of resistance. All this is super short-term at this point, right? Then you have a little bit of this, you have a little bit of this resistance turning into support over here, and you have that confirmed on those 2 days, and you have the 50-day moving average, right? So you have all these different factors working in, even though it's not something that's as clear-cut as this bottom over here. So in this case, I really, really, really like that stop placement. And on this particular trade, kudos to you, Adam. I think that this is really awesome. The trade didn't work out that where we made a ton of money on it. We did make small gain on it. We ended up exiting over here at $1,020.04 on this day over here. So that gap down. We raised our stop just above where the classic pivot is. So the classic pivot was right at around 116, 117. Ended up getting stopped out at 120. So we have a pretty small gain right there. We would have ended up being stopped out of this trade regardless if we had put our stop over here. The only way that we're really sitting with this trade, if we were just like a buy and holder and we're willing to sit through all this, is if we had our stop way down here at 927 and then we wouldn't have been shaken out, but we would be holding from July and sitting through all the way through October, the end of October, and having all that opportunity costs. And in future videos, you see how we ended up doing and making bigger gains without having to sit through this mess. So buying there was the right thing to do on July 17th. Setting the stop loss there was the right thing to do. And again, really liking that stop loss placement. There's a lot that we can learn from just looking at that and seeing the nuance of being able to blend the moving averages with subtler resistance and support areas within the base without it being too greedy. And again, like it's really that 50-day moving average and being in conjunction with all that allows you to get that really tight zone without it being too overly aggressive of a stop like we saw in the prior video. And yeah, raising the stop in pretty quickly was the right thing to do, especially when you had that big reversal there. And yeah, this trade didn't make us a lot of money, but it was very, very well managed, in my opinion. Let's move on and take a look at Apple. Let's talk about Apple. Now, this is one that broke my heart for a very long time, and it's not just because that I'm a pretty big Apple fanboy. I've got the MacBook Pro, I've got the iPhone X that this is being recorded on, Apple TV, Apple Watch, you name it, well, whatever it is, Apple, I just love their products. But my love of their products has absolutely nothing to do with why we bought the stock or why I was heartbroken about this trade. The reason why I traded this stock, and it's not just because of the loss that this ended up generating for us, it was how we generated this loss. So, and it took me a very long time to understand the lesson here and to understand that this actually wasn't a mistake. For a long time, I thought that this trade was a mistake, and it wasn't. And the reason why will become clear in a moment. But let's walk through this. So we get into Apple on August 2nd at 159.32. And the initial stop is set down here at 147.27. So a little late on the entry, okay, fine. But the stop placement is actually pretty good, right? Well, it's down here below the logical area where it should be getting support, right below that low. Kind of coincides with former resistance within the base down there, and it's also below the 50-day moving average. Lots of things to like about that stop placement. So Apple is going along, then we end up raising the stop somewhere along the way, and we end up being stopped out at 151.77. Apple never actually gets all the way down to our initial stop. And we're stopped out on September 22nd, and then about a month later, Apple forms this really nice cup with handle and then breaks out, and it's off to the races. And what could have been a halfway decent gain ended up turning into a loss, and that loss came about almost a month and a half after we bought this thing. So not only are we losing money, we're losing time. And that just plain stinks. And yeah, it was real hard for me to understand the rationale of why we're moving our stop up to this level here, and where we would potentially be shaken out, and we're not just going to lock in a gain or exit a full portion of this trade. And so one of the things that I want to point out too is that just for the model portfolio, for the sake of simplicity, it enters everything all at once and it exits everything all at once. So that's part of it, and that's why in my own trading account that I'm managing myself, I always like to use bracketed stops, because it helps to not just get shaken out of the entire position and lock things in along the way, but for the model portfolio to be super easy, it's all or nothing, right? So the lesson that I learned from being shaken out here, and why that wasn't such a bad move, is not just looking at this by itself, because looking at this by itself, it just looks like it's a big mistake, and why would you do something like that? But in looking at all of the trades over the year and how stops were progressively moved up, the rationale is really to minimize the amount that you have at risk. So the way to compound gains over the long term is to be able to compound your gains. And if you start having losses, like full losses or even partial losses, the more losses you have, the more difficult it's going to be to compound your gains. So if you take partial losses instead of full losses, it ends up working out in your favor, surprisingly. Like, so if you are risking, say, 5% on a trade, and you cut that loss in half to 2.5%, now you could take 2 of those losses instead of just taking 1. So it's playing the numbers game. It's knowing that you have a certain batting average, you have a certain win rate, and by playing it this way over the longer term, and then just letting your winners run when they keep on going, you actually end up winning more that way than by keeping your stop low and actually letting that stop get tagged. Because if it gets tagged once, then it's hurting the way that you're able to compound that much more. And so even though it took me a very long time to understand this stop placement, at this point now I'm able to appreciate it. And even while I'm talking to you on this video, I'm also noticing that you have this moving average right here, right below the 100-day moving average. And that 100-day moving average too was something that was held way back here. And so it also makes a little bit more sense technically, just from a moving average perspective too, even though we're only moving it up a partial amount. So that's my thoughts on Apple. So that was a lot to take in. Let me know what you thought about it. Leave a comment in the comment section below. If you have any questions at all, leave that in the comment section below too, and I'll personally help you out. Also, if you like this video, click that thumbs up button. That's really going to help us out a lot. And also make sure that you subscribe to the channel so that way you get every single update. Thanks so much for watching. I really appreciate it, and I'll see you again in the next video. Take care, and and have a great day.